So let's get started. Let's understand what exactly is accounting. To account means to explain. Accounting, therefore, is the process of providing explanations. Now, these explanations are provided by recording events or actions. In business terms, these are called transactions. It is for this reason that accounting is known as the language of business. What is business? Let's take a look at Joe's furniture factory. Joe buys logs of wood and converts them into furniture in his factory. He buys them at $40 a piece, spends about $10 in conversion, and sells the furniture at $75. This is Joe's furniture factory. Apart from Joe, the management and the employees of Joe are interested in knowing how the factory has been performing. They are collectively known as internal stakeholders. Joe has also borrowed money from bankers and other financial institutions who invested in his business. These people are collectively known as external stakeholders. Uncle Sam is interested in knowing how much taxes Joe's business is paying, and therefore the government is the third stakeholder in any business. The internal stakeholders are communicated in a language called as managerial accounting. The external stakeholders are communicated financial information in a language called as financial accounting. Uncle Sam is given his information in a language known as tax accounting. Internal stakeholders are keen in understanding whether the business is really doing well, and therefore they are interested in knowing the accurate profits. Uncle Sam, on the other hand, is interested in knowing whether the business is paying appropriate taxes, and therefore businesses tend to show lower profits to Uncle Sam so that they can pay lower taxes. The external stakeholders are interested in knowing how much profits the business is making, and therefore businesses tend to show a better picture to these stakeholders, and therefore they show higher profits in order to impress the external stakeholders. In order to curb this practice of showing different profits to different stakeholders, there are standards. In financial accounting, the standards are known as GAAP. They lay down the procedures for accounting of revenues, costs, assets, liabilities, and so on. Similarly, for tax accounting, we have standards or tax laws. The IRS code is an example of a tax law that is in force in the US. Summary. Accounting is the process of providing explanations. These explanations are given by recording transactions. It is thus called the language of business. In any business, there are three stakeholders, and for each stakeholder, the type of information required is different, and therefore accounting is different.